guest is a true builder of ecosystems. Massimo Barone is the founder and CEO of SmartCard Marketing Systems, a past company powering the next wave of innovation in paytech, fintech, and blockchain tech. With 30 plus years of experience, he's launched three public companies, scaled 200 plus tech projects, and built products across digital banking, embedded payments, tokenization, and AI across the US, Mexico, India, Africa, and Southeast Asia. If you're a founder, builder, or investor trying to understand how to launch and scale in complex regulated industries, this one's for you. Welcome to the show.
Hi, thank you for having me here, Ersa. Pleasure.
Okay, let's just dive into the questions and get the most of our guests today. So you've built hundreds of products. How do you decide which ideas are worth building and which ones to skip?
That's a great question to start with. Well, I look at the whole entire, business kind of like a startup every time. And I wonder, what's the problem in a very specific industry, but I always tackle it from a payment uh, practical method because payments is always the largest problem in a project. So if
Hmm.
I can understand how to make a fundamental change in the payment structure, the business intelligence side and the processes that are required then naturally come. And of course, you have to pick very specific industries. Or in my approach, I've always been more of an agnostic type where I try to build out a wireframe that will accommodate an industry. And I figure out what's the gap between investment and being able to deploy the structure. And then I go after that mid-tier market who doesn't have the investment capacity to fulfill that need.
That's great. So what's the biggest mistake founders make when trying to scale in fintech or blockchain?
So compliance and timeline are the true problems, but what it really comes down to is misunderstanding the regulatory framework versus the bank partnerships or structures in the industry, an appetite for risk, okay, so, which will completely alter your all of your objectives, and that's fundamentally the key.
Okay. So you said compliance. So how do one ensure that they're compliant with each and everything?
Well, I mean, obviously, it depends on the market you're in, and then understanding the financial services that are currently available in that market. From there, you can understand, of course, what technology you're trying to uh, develop and of course launch, and then trying to understand where the principal leaders are in that industry specifically. You can
Mhm.
kind of gauge what the rest of the market is requiring, and if you look to other markets to understand what trends are working, you may begin to understand where the banks and the major leaders like Visa, Mastercard are trying to push. So you don't want to be too far ahead of the curve because you need to find an entry point, sometimes with a partner, or else you might be blocked out, even though you're the best innovator available.
Okay, that's quite helpful. So you've launched in so many countries. How do you think
Yeah.
about product market fit and when you go international?
Well, first, I mean, you have to understand what markets you're going into. You take a market like Southeast Asia.
Hmm.
Each country is so different than the
Yeah.
next. The regulations are complex, uh, and none of them are you know harmonized or in parallel. From Singapore to Philippines to Hong Kong, to Thailand, you know, the same payment innovation might be in demand, but the banking infrastructure is inadequate or dealing with so many legacy issues. And then, of course, if you're trying to deploy a middleware or client-facing solution, not everything may be, very easy to comprehend, and you need to really find a launch place with the right partner who can get you into the market. I've always found partnerships the most structural and best way to get into a market, but that's not always possible.
Right. So where do you see blockchain solving real problems today and not just hype?
Well, obviously, blockchain is a whole new structure, the way cloud and mobility were for many companies. Um, Obviously, blockchain. The clients don't fully understand blockchain. They conceptually they understand what's happening in the blockchain, but they don't understand how to apply it specifically because you know you have centralized versus decentralized. You have open chain versus closed chain, and then the aspirations for many projects are to get listed on multiple crypto exchanges, but that actually may not be necessarily what they're after because they don't understand truly what their asset or intangible asset is and why it should be on the blockchain. So I think that the principal understanding is, kind of using like a vision board. You kind of lay out all the things you want to aspire to do, and then you try to fundamentally fit the pieces if your market that you're after uh, applies to the model. Okay, and look, there's a lot of companies that are competing on blockchain. Many fundamentally provide a good service structure, but many don't have a compliance and regulatory framework for the client to follow. And that's where I really put my focus on in SmartCard was the compliance roadmap to an output that would not put the customer in legal issues with regulators, banks, of course, government agencies like the SEC, the equivalent in different countries.
So you help your customers, reaching the goals and helping them.
Oh yeah, absolutely, and it's they may envision a 1 month timeline where in reality it could be 6 months, and there are projects that may never come to the table because the
Yeah.
applications itself are not adopted by their intended market, right? So you have to be able to pivot, which is very important, and then sometimes relook at the structure that you're providing because it may not be favorable to the market at the time. It's very difficult to gauge in a large approach. You really need to focus in on what the customer is trying to target.
Yeah, and what he's struggling with. Right. So, what
Oh
is
yeah,
the most
absolutely.
exciting things happening in embedded payments or real world assets right now?
Well, we specialize in bringing the two together. Obviously, we have a cross-border platform. Uh, we have a card processing switch, and obviously we specialize in payments and platforms as a service. So we have a whole embedded architecture of PayTech that complements being able to deliver, embedded payments. That includes, digital assets, blockchain, everything encompassing. The, the You need to size up the assets or IP properly. Which partners make you, stronger, and then of course, which countries you're targeting because payment
Mm.
infrastructure is so different, and um, in cross-border alone, you have originating requirements for the countries you're trying to, either do collections from or pay out to. And obviously, if you don't have a good grasp on compliance and a regulated solution, you may be causing yourself, harm. You may be breaching rules or laws, and that goes with card payments as well because, um, the belief is you can put a card payment switch anywhere, but that doesn't make it compliant. You need to put in the host country. Data laws now are becoming very strict. Encryption laws must originate in the countries of origin. For so there's so many fundamental factors that you have to consider, which have dramatically increased the cost of a startup. Okay,
Mm.
there's no more that whole belief where you can start from a garage and just
Yeah,
boom. Today point for a payment company has been lifted so high uh,
yeah.
that I think that people don't realize what it truly costs to have a certified and compliant solution.
So, what do you think the starting cost would be for a startup?
Well, obviously, it depends if they're trying to do a client-facing solution or some middleware, or if they're trying to develop a core application. Today I think um, even with AI and all these new concepts of no code and adapting a model, you know, money doesn't fix everything because compliance and regulatory, control the timeline. But if I was to say today's structural costs, from a basic app in payments, can run you up to a quarter million before compliance and regulatory. And if you're trying to build out a core solution, you're looking at anywhere between 2 to 5 million. And of course, depending which market you're trying to get into. But I would say that the costs today are highly elevated comparable to only 5 years ago.
Okay. So you've taken companies public. For a founder listening right now, how should they even start thinking about that journey?
The best advice I can give is first determine if you're looking to list on an exchange, which was the old, common practice. Today, you have a lot of the different advantages listing on a crypto exchange, where you can structure your asset or company to be listed on a crypto exchange. So you may have today you have kind of the ICO versus the IPO. Okay, if you go the traditional route, let's say from listing on exchanges, the key importance for people to understand is documentation, a data room that supports all your activities, internal, external, map out your workflows, everything from CVs to lease contracts. Make sure your data room is structured properly. It's the best way for you to have a visible footprint of the company's structure. Um, Private equity firms, investment banks, or love money, they all start with what you aspire to do. And I always tell early startups, the reason why I was able to go through those channels was, you know, your pitch deck, your technology, and especially an exit strategy for investors is important as an exit strategy for yourself. Right? Investors need to understand what
Mhm.
their timelines are versus yours, or if they're mutual. Okay? And I find most startups fail to match the two or to define the relationship. But if you can define the relationship from your objectives versus the investors and timelines, I find that you can structure better and prepare yourself uh, for potentially a public offering, and then start understanding or take some courses of fundamental board or management requirements that may be related to a public company. Kind of get a scope of what the objectives are, what those um, mandatory requirements are, because it can be costly simply to maintain or operate a public company,
Hmm.
which is sometimes not in the idea of many startups or founders, because they don't grasp the reality of cost of being public. So,
Yeah.
prepare a valuation process, okay, so that you can bring yourself to understand how the valuation modeling will happen, so you can determine
Hmm.
what your entry level uh, valuation is, so you can have an acceptable one.
Yeah, I think that would make a strong foundation before you go into the whole process. So, what do investors really look for in early stage fintech or Web3 startups today?
Um, that's a big question. All investors are not the same, but and
Yeah.
when it's a startup, early investors want to understand where that evaluation and valuation model will happen for them. So if they're early investors, depending if it's truly at the infancy of the company, or are they investing at a time where your pre-production or commercialization of the application, their appetite and attitude changes. Okay, so
Mhm.
of course everybody wants the early valuation model with the highest exit, but um, you need to find a medium where the discount for the investor is fair. Okay, and I think you have to set expectations on timelines, and of course the one topic no one wants to discuss or avoids is what happens if we don't meet the timeline. What is the next step, and what is the possible solutions, or pivots that are required. And of course, nobody has a crystal ball. In the last 5 years, we've seen COVID, wars, inflation, tariffs. It's coming from every side, right? So we've seen private equity funds fall. We've seen banks collapse. So, you know, try to give a worst case scenario and what happens if the company fails, right? What's left? So that gives
Mm.
a sense of helping the investor understand your insights, to what's next. And I think with that, you come out with a fair partnership structure with an investor or investors for the future.
So you've built partnership across the US, Asia, Africa. So what's your approach to doing business globally?
Um, well, obviously, I look for partners who have a relationship in a financial structure, whether it be a bank or some payment structure. Um, I've always been the belief that if you have a step in a country, you need to have a payment solution provider as a partner or one that's willing for you to deploy locally on their structure. That gives you time to market, it removes barriers of entry, and you have
Hmm.
a modeled solution that can be actively uh, go to commercialization and, of course, active in the market. So, when you have a solution center with payments, you already have a market that has an appetite to get on board. Um, when your solution doesn't have a payment infrastructure, whether it be billing, collections, bill pay, or some form of local payment structure, it may be very challenging, and sometimes can take a company, from 5 months to 2 years in order to build that structure. So your technology comes out of range for its intended
Hmm.
purposes, and you may fall behind competitors. So you need to, you know, put importance on payment infrastructure first. Regulatory comes with it, and then compliance, of course. And then at that moment, you could truly, put your timelines in order so that you can estimate a true activation or underwriting in the country for deployment. I'll give you an example. In the Philippines, um, we were 2 years in. We found the bank and partners. It took 2 years for the bank and us to migrate and integrate technologies, and then it took 6 months to a year to get certification and compliance locally. That's a 5 year run, and then, of course, in the meantime, um, it's a market that did not have many Visa, Mastercard service providers, right? So, or members. So you have a whole evolution that has to occur, right? So, a market can take 7, 8 years to
Oh.
develop.
So quick, last three questions. So what is the founder trait you always bet on? One founder trait that you know that works.
Are you talking about that I look for with someone or personally with myself? You mean
Yeah, no, someone in a founder.
obviously someone who's honest with the conversation? Um, you know, speaks to the difficulty versus only the future of that's bright. I like someone to kind of early on tell me, look, this is the challenges we had. This is how we got here. So I understand what their footprint really looks like. When I meet a founder for the first time, or if they've been down the road many times, their conversation will change based on, of course, experience, right? So I call
Hmm.
it the scars and trophy story. You know, yes, there's one in every 1,000 companies that gets offered $1 billion, from the beginning, and then there's the others who have to build and scale based on cash. Okay, and that's a founder who has built up a storyline and a company. Um, because look, we've been down the road with founders where they've raised a lot of money up front, they have no experience, and they have spectacular bankruptcies, right? Big 50, 60 million, 100 million in payments
Hmm.
because um, they're not honest with themselves on what's required or don't understand. So for me, that honesty from the initiation is important. Um, I'd like to feel that there's something behind the problem, right? So uh, I don't only look for smiles. So you know, and then of course, know, someone who takes the time to walk you through. You know, this is crazy. I'm about to tell you, but you know, many investors never actually see the technology of a company. You know, they go in with the story, they they invest, and I can tell you, they've never actually seen what the company does. It's crazy, but this is the real big
Oh,
majority of investors. So yeah, yeah, So um, I've been through investments. I've completed investments even with private equity firms. That they come in, they look at the story, they look at the presentations. You know, they go to the data rooms, but technology wise, they don't they it's the least important part of their mindset. And I've walked away. So you have to fundamentally get a good grasp of the person, and you got to sit down with them, have a coffee, away from the conversation of the business. Fundamentally get to understand them and know them. I think that's important for me is to understand who they are. You got to step them out of the box. Just like, who are they? You know, have that conversation with them. Whether it's a coffee or a glass of wine, but just you know, get into the conversation. Just you know, or else you can't read the person.
so in short, close to reality, not too optimistic, and not too dreamy about the results.
Yeah,
But with some real actionable, but yeah, dreamy is good, but with some real actionable plan.
correct, correct.
I was asking, one trend you think is overhyped or that's underrated in your industry?
That's a good one. Well, there's a. I'm not going to say it's hype. Um, it's too early stage, but um, I think the whole AI modeling itself is overhyped at the moment. I think it's because it's an investment bubble that's going on. I don't think true applications have really hit the banking and service structure market. I've seen a lot of projects fail fundamentally because the business processes and intelligence don't work with existing models. Uh, but I think with all the new major AIs that have come in, I think there's a true potential of taking the fundamental utilities from each of them and making them work. I came from a market where before it was AI, it was considered predictive, you know responses, or predictive dialers, or predictive, you know and best responses in scenarios. I think it's overtaken the businesses that are in either fintech, like everything paytech, fintech, blockchain. But I think that's going to come down a bit when the two kind of converge. And I don't
Hmm.
think we've seen really a major successful AI in financial modeling yet. There's a few out there making a lot of noise, but I don't think we've seen it come downstream yet. And months ago, we were trying to get rid of task bots, and all of a sudden it became the flavor. So you I think there's still a way to go, but I think it's too early yet for financial service structures. But but the market says otherwise, right? So I think it's just they haven't met up yet.
So that was packed with real insights. I appreciate how open you were about the lessons, challenges, and the mindset it takes to build and scale in complex markets. There's a lot of founders and operators to take away from this, and thank you so much for being on the show and sharing your insights.
Oh, it's a pleasure. Thank you very much.